Welcome back to the Dividend Diplomats YouTube channel. You've got your boy Bert, backwards hurt locker over there, and you know you're rolling with Lanny, the Dividend Diplomats, and we're here to put two dividend growth stocks in the ring to see if one of these, or maybe both, are dividend stocks to buy right now.
Buy your WrestleMania tickets, buy your SummerSlam pieces here. This is going to be the main event of the week on the Dividend Diplomats YouTube channel. We are pumped up, but before we get there, we're not asking you to pay for the pay-per-view here and get WrestleMania. We're just asking for you to subscribe to our channel and give us a thumbs up, everybody. Help us out, help keep growing the YouTube channel so we can keep spreading the news of dividend investing. But all right, Lanny, everybody's excited. Everybody's hyped up here. We got the promos. We got Mean Gene, who is going to be entering the ring here today.
Well, you listen up, brother. The S&P 500 is still very high, over 4,600. They were down, though, this past, couple of days, into middle of December here. We're filming this video December 14th, that Tuesday night. Right now, the S&P 500 is at 4634.09. But we wanted to talk to you about two dividend growth stocks, despite the stock market still sitting at above 4,600 threshold. And Bert, I know one of your favorite wrestlers was The Godfather. So, choo-choo, we're going down
that dividend train.
Yeah, we're hopping on the dividend train. We're going to the transportation industry. We're here to talk to you about Norfolk Southern and Union Pacific. And Bert, why do we want to talk about these two stocks?
Well, first off, these are going to be two great companies that are in a sector that has some very, very high barrier to entry. So if you think about it, you don't just go into your garage and start building a massive railroad transportation company like some of these other tech companies. It's hard to spin this idea up quickly. It takes a lot of time, infrastructure, and capital. So it's a sector that we like, and especially for a long-term investing mindset. Second, check out one of our last videos where we talked about the dividend increases, and you'll see the first company that we featured on there was Union Pacific, because they just announced their second dividend increase of 2021. So you know what? Landy and I were talking, two great dividend increases. Let's talk about UMP. Let's see if they're that undervalued dividend stock to buy and put them head to head against one of the other top companies in their sector, Norfolk Southern, which we both own.
Exactly. And we're putting them through the Dividend Diplomat stock screener, focused on one, the PE ratio being less than the S&P 500, but seeing who's less against the competition. Two, the dividend payout ratio, preferably below 60%. And Bert's got that sweet spot, that perfect payout ratio between 40 and 60% as he chugs his beer, his Steve Weiser. Third, dividend. Oh, nice.
Great Lakes, Cleveland focus. We're shopping.
Give this video a thumbs up if you've had a Great Lakes beer, one of the best breweries here in the Midwest.
Mm-hmm.
Third metric is the dividend growth rate. We're looking at the history as well as how high and how fast do they grow that dividend. And then lastly, we will toss in the dividend yield, brother.
That's right. And this one's going to be exciting here too, because we both own Norfolk Southern too. That's why we're putting them in the arena versus Union Pacific. So it's going to be very exciting to see how the two companies shape up. And then after we run them through the metrics here, we're going to talk through the financials a little bit after. So Lanny, what do you think? Should we jump right into that first metric, the PE ratio?
Before we jump in, I will say, buying dividend stocks is a great way to build a passive income stream. Dividend stocks are also a lower risk way, typically for beginner investors and for all investors. Bert and I are both trailblazing a path, buying dividend growth stocks, dividend investing almost 100% on our way to financial freedom. Now, let me hear you say something about that, Jack.
There's nothing more I need to add to that. You hit that one spot on. That's the name of the game. We love seeing our dividend income grow. We love seeing that passive income stream that we don't need to lift a finger to earn every day. That's what it's all about, everybody. So you know what? Let's jump right in, because let's see if at the end of this, we're going to be growing our passive income by buying shares of these two companies, or what we're going to do.
Exactly. That leads us right into why we look at dividend growth stocks and why we're evaluating these two stocks potentially to buy.
Yep, that first metric. Let's jump right in here. That price to earnings ratio here. So remember, Stock prices are closing as of December 14th, 2021. Norfolk Southern's closing price was $283.74. Their earnings were forward earnings, I should say, per Yahoo Finance are a blistering $13.72. Gives you a PE ratio of 20.68.
Not too bad. Now rolling over to Union Pacific, closed at $244.61. Analysts are expecting $11.36 in forward earnings. So that equates out to just a little bit higher at 21.53, Bert.
Interesting. So for comparison, the stock market right now is trading at a PE ratio between 25 and 30, give or take, depending on where the market's falling, what the inflation reports are, and what happened in the S&P 500. When you compare the two, so they are both undervalued compared to the market, not significantly undervalued, slightly undervalued compared to the market, which is interesting. And obviously Norfolk Southern with a PE ratio of 20.68 is slightly lower than UNP, but not materially different, I would say.
One thing I want to get into too is that Union Pacific right now is currently projected to earn about $21 billion in revenue. And Norfolk Southern, on the other hand, is projected to earn about $11 billion in revenue. Two big companies, obviously two of the biggest in the industry. But Union Pacific is a lot bigger from a revenue standpoint. But Bert, how do those profit margins look like for these two companies when we're talking about earnings?
Union Pacific's profit margin is 29.9% compared to Norfolk Southern, 27% profit margin there through the first 9 months for both of those companies. So Union Pacific's must be managing those expenses a little bit better there. They're squeezing a little bit more out of the revenue to produce higher net income, which is great. That's what you want to see.
Tell you what, high profitable businesses here for both companies doing very well with those margins. But Bert, time to dive into that second dividend stock metric, the dividend payout ratio. Now, again, analysts, we just went through their expectations of Norfolk Southern and UNP. I'll jump into Norfolk Southern here. Currently that dividend they pay us $4.36 per year, or $1.09 per share per quarter, based on analysts of $13.72. Payout ratio is pretty darn low, Bert, at just over 31% for Norfolk Southern.
Perfect. Let's see how it compares. UNP after that second dividend increase, their new quarterly dividend is $1.18. So that gives you an annual dividend of $4.72. Divide that by the 1136 forward earnings. It gives you a perfect payout ratio of 41.55%. So obviously both companies are well below that 60%. UNP's in that perfect range. Norfolk Southern, lower payout ratio, but with the lower payout ratio, does that give them room to announce larger dividend increases in the future? Maybe another one's coming, just like UNP announced. Both get a check mark for this metric. So I think that's the bottom line.
That's great, Burton. Yeah, to go into that segue into that third metric, that dividend growth rate, this is the best part about it. I can't wait till you talk about UNP or United Pacific, but Norfolk Southern, their dividend growth streak's about 5+ years right now. There was a time in 2016 where they did not increase their dividend, but that 5-year average dividend growth rate is 12.3%. 12.3% for Norfolk Southern. And they did something really cool this year, and they've done it a few times now. They increased their dividend not once, but twice this year. First, early on in January, it was a 5.3% increase. But then obviously later on towards the end of summer, they said, we're not done yet. We're giving you another 10% increase. So overall this year was about a 16% total increase, starting out at 94 cents and ending up at $1.09 for Norfolk Southern. 2 increases this year.
And you're absolutely right, Lane. I mean, that's fantastic for Norfolk Southern, especially given that period where they didn't increase that dividend. UNP, on the other hand, they've increased that dividend here for 4+ consecutive years. They had a similar period where they didn't announce a dividend increase. It was only 7 quarters from 2019 to 2021, but it was enough to kind of throw that dividend increase streak in a little bit of flux. Their long-term trend, they have a great long-term history of increasing the dividend from a history standpoint. 5-year dividend growth rate, 6.64%, featuring the double dividend increase here in 2021. That discount double check dividend increase right there. We'll go Aaron Rodgers style on that, which in total this year they've increased that dividend 21.6%. So Both are similar right now. How like their dividend growth rates, I would say, are tracking similarly for each.
They're tracking. Now to get into that bonus metric, the dividend yield, this could be the make or break here. Norfolk Southern dividend, again, as we said, it had $1.09 per share per quarter. Stock price is at a blistering $283 because guess what? They're up almost 24%, or 21.5% year to date. That dividend yield is 1.54%, just above the S&P 500.
Union Pacific has a dividend yield of 1.93%, so 39 basis point lead on Norfolk Southern there. And you know what? You may think 0.39% isn't a big difference or a big swing, but when you're talking yields in the 1%, that is a pretty substantial amount from a dividend perspective.
When you're making big trades like Bert, tossing around millions of dollars, it makes a huge impact.
You're darn right it does. And then just to talk through, I know Lanny mentioned the price history for Norfolk Southern. They're actually both pretty similar, I would say, from this. NSC's up 21.55% year to date, nearly 24% over 52 weeks, and Union Pacific's 20.5% year to date, and 22% over a 52-week period.
So to quickly recap Norfolk, and Bert, you can recap UNP. Norfolk, a 20.68 PE ratio. The second dividend metric, they only had a 31.78% payout ratio. Third metric, the dividend growth, they've been doing it for 5 years, over 12%, and that bonus metric, over 1.5% dividend yield.
UNP, P ratio 21.53, perfect payout ratio of 41.55%, 5-year DGR 6.64%. They've increased that dividend for 4+ consecutive years. This one's tough.
Man. Yeah, I mean, both great companies. If you don't own any and you really, really want a railroad, you could buy one or buy the other, or buy both. Obviously, Bert, we both own Norfolk. I really wish it was a little bit lower in price.
I'm with you. I mean, I'm not running and screaming, I need a railroad allocation in my dividend stock portfolio. Great company if you have them. If you're really craving it, like you said, it's great. But I think for me, it's not a must-have for my portfolio to add another railroad to my portfolio. So I'm going to continue looking elsewhere for other undervalued stocks.
Yeah. So we aren't saying that this is a dividend stock to buy right now, but again, not a bad company to own. Sometimes you have to pay to buy quality.
Yeah.
Rather put good money towards good assets versus good money at bad assets. These are good assets.
Yeah. So everyone,
yeah,
we were saying the same thing there. Let us know what your thoughts are on Norfolk Southern UNP, or are you looking elsewhere in the sector, or not even looking in the sector at all? Give us your feedback here. We'd love to hear your thoughts on it.
Yeah, let us know in the comments, obviously which ones you already own. If you think these are stocks to buy, let us know. If there's another one in the industry, we could put them in a triple threat match, maybe a fatal 4-way, to see who wins the belt here.
We're gonna run out of railways soon. We can't have two men. We can't have a Royal Rumble here with railroads.
Monopoly had 4. But guys, if you haven't already, definitely subscribe to our channel and give this video a thumbs up. Bert, do you have any other parting words, my man?
Nope. And if you're not looking here, don't stop your journey of buying undervalued dividend growth stocks. Keep searching elsewhere and keep trying to see your income grow. That is the name of the game.
That's the name of the game. Well, we appreciate the love and support. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.